Well, happy Saturday, everybody, and welcome back to Strongman Personal Finance. I apologize for my absence, but I have been very sick. I have not felt well, and I've been a very, very busy boy. But now we're back, and in this sponsored video, we're going to react to our favorite dividend investor, PPCIAN, explain the dividend snowball. So we've already heard about the dividend magnet, which is literally just the dividend snowball rebranded with weird Mormon, I guess, positivity. Now we're going to circle back and cover the basics of the dividend snowball, which I am personally not a fan of. I am not a dividend investor. Oh, no. I am a total return investor who is more than willing to sell shares as needed. Because if you don't sell shares to fund your retirement, you're going to retire a lot later than you might think. Anyway, let's go ahead and dive into this sponsored video. And if you want a sponsored video, it's $50 for non-members and $45 for members. All right. Now, the instructions. So the guy emailed me. He said, Strongman, use the positivity of the dividend magnet to comment on the dividend snowball video. I would like to see a marked uptick of positivity from the magnet in this video. Okay, he wants me to be more positive. I'll try. I can't guarantee positivity. This is Strongman Personal Finance. We're not positive about anything except VT and China. All right, so PPCIAN, he's pretty significant YouTuber. Dividend snowball effect explained how I built massive dividends. And he's got this little drawing right here, just basically repeating what every other dividend YouTuber says.
Hey everyone, Ian here. I like purchasing dividend-paying stocks like Air Products and Chemicals. I started buying that stock, ticker APD, back in 2013, so it's been about 10 years. I like buying these types of stocks because they pay dividends, and I can use those dividends to pay my bills, to pay my living expenses. They automate my income, if you will. I started buying APD Air.
You know what also helps you pay your expenses? You buy an investment and you sell shares as needed. That's also a way to fund your bills. You know, that's possible. You know, you're allowed to sell shares. You could sell shares, because if the stock market keeps going up, your share, let's say you have one share. Well, that share is going to be worth more over time. So even if you own half a share, but it's double the value that it was before, guess what? You still have the same amount of money. But you have less shares, bro. Okay. Why does that matter? Why do I have to only live off of dividends? Because you know what that results in, right? That results in people buying high dividend yield stocks, which are not as safe as you might think.
Products and Chemicals back in 2013. I started buying that at $95 and change. Right now, that is actually trading for $318. So on capital appreciation alone, I have done quite well, but I really don't worry about that. It's nice to have, but I never plan on selling. The reason
Why? Why? I'm trying to be positive. Dude, if you bought for $95 and it's now $318, you're allowed to sell. What, you're leaving $200 something on the table. Why are you? Oh, I can't use those capital gains, bro. I hate total return. You know, the S&P 500, it's done what, like 10% on average. You know, the dividend yield of the S&P 500 is, it's like 1 or 2%. Okay, you mean you're not going to use those 10% compounded gains at all? You can only live off the dividend. Why? I don't understand.
I own Air Products and Chemicals is because they have increased the dividend so many times consistently over the years. And my simple yield on cost right now on that stock is actually 7.4%, which is pretty awesome for a qualified dividend in a company like APD that is so exciting and I think defensible. They're in a very defensible business model, and they don't get caught up in a lot of drama like some of the higher profile companies that I own. But I digress. I'm not Snow. I'm not the rapper Snow, but I am here to inform you all today that the dividends.
Who's that? I've never heard of Snow in my life. I'm not in the rap scene, okay?
snowball effect is real. I want to discuss in the video today for both beginners and seasoned investors alike why dividend stock investing works. And what I just shared with APD, it's kind of the tip of the...
I've never been a dividend stock investor ever. You know what? You know what would have made you done the best over the last 15 years? Buying large tech. If you just bought QQQ, you probably would have had the highest returns on average. Guess what? You know what the dividend yield of the QQQ is? Insignificant. Oh, dividends work. No, it's total return. This is common sense. Common sense. I don't know why this is so hard for people to wrap their freaking brains around.
The iceberg, if you will. There are three main levers. There's a bonus lever, number 4, that make dividend stock investing work over long periods of time for people like myself who use dividends to pay bills. And I want to explain that snowball effect in the video today. Get ready, everyone.
If you use dividends to pay bills and you're taking away from your compounding, you want to reinvest the dividends. Oh, I've always reinvested my dividends. This is the first time in my life, because I'm about to go self-employed, that I'm going to take dividends. Here's my plan next year. Okay. If I need the money, I'm going to take the dividends because I'm already paying freaking taxes on them anyway. And guess what I'll do? If I need more money, you know what I'm going to do? I'm going to sell some shares. Yeah. Yeah. And I'll be able to generate a lot more money than just a pure dividend investor. That's right. I'll be able to maximize how much money I can make versus somebody that only takes dividends. I can't sell my share. My share went up by 1,000,000,000%, but I can't sell it because I can't do that. Okay.
For a really exciting dividend stock investing video. All right, everyone. So I'm back here with my 3M Post-it board. Please go ahead and put a comment below if you remember the PPCIAN videos from the original days when I was in my old house in the corner and I was doing the videos with this board.
Yeah, I bet you sit in the corner a lot, don't you, boy?
So excited to be back doing it old school style. As you can see in front of you right now, there are 3 main levers, but there's a 4th bonus lever as well. What you see here really is a whole bunch of snowballs. I did my best to illustrate this, but the philosophy is that the snowball starts really small, but as it rolls downhill, down the slope, it gains more momentum and it builds in size and eventually...
Yeah, but in your magnet video, you said, you could lose control of the snowball, your portfolio compounds and you're just losing control. It's just going up so fast. Oh, it must be awful. Oh, your portfolio is compounding at 12% per year. Oh, I can't control this. Snowball's a bad analogy, bro. We need something better, like the magnet. The magnet's more got positive vibes. It's got energy, bro. It's got wavelengths.
Eventually, it becomes an avalanche of sorts in terms of the biggest snowball that could ever exist. Now, the snowball with just any one lever, it will grow over time and it will grow really well. But when you start combining these levers, that's when the slope starts getting steeper and when the snowball gets bigger a lot quicker. It's funny because the example I shared in the introduction today, my simple yield on cost on air products and chemicals, that actually is only my simple yield on cost, which is really this first lever, lever number 1. And basically what that means, and what I want to start with, is the first bit of magic that makes dividend investing work for people who want to live off of cash flow is the simple effect that companies like air products and chemicals, as they do well over time, as they grow their businesses.
Most companies fail over time. Did you guys know that? Yeah, that's one of the big benefits of in total market index fund investing. Most companies underperform a treasury in the long run. Yeah. That's why do you think everybody just talks about large tech? Because those are the winners out of all those probably thousands and thousands of companies that went bankrupt. Okay? It's called, what's the freaking bias called? Selection bias. Yeah, that's what it is. Okay? So, yeah, some companies can increase dividends. A lot of companies actually go bankrupt and their dividends go to 0. Did you know that?
As they increase revenues and profits and earnings, these companies like to reward shareholders, and they do so by increasing the dividend on an annual basis, typically over long periods of time. Now, not all dividends.
Yeah, it comes from earnings. Yeah, okay. That's what it comes from. It comes from earnings. You want earnings growth. Who cares about the dividend? If I was like picking stocks all the time, I would not care about the dividend. I mean, okay, it's got a dividend. That doesn't mean it's necessarily bad. But if I'm looking at a company, like I don't care about the dividend. I care about, is it going to grow in the long run? Can it grow profits in the long run? Can it grow revenues in the long run? That's what I would be worried about. Who cares about the dividend? You could slash it to zero. I don't care. Because you know what I could do? If I 1,000x'd, I could sell some shares. Oh, I know. Oh, no. Oh, but I can't sell that. It's against the law.
And stocks do this. But the types of dividend stocks that I like to own, typically speaking, they do this. They have a track record of increasing dividends year in and year out. And so,
yeah, until they don't.
So you can see just at the top of this thing with lever number 1, the slope, it's not that steep, but nonetheless, that slope is real. The snowball gets bigger. We all know right now that air products and chemicals, the starting dividend yield is in that 2% range. And it's always been in that 2% range because the stock price goes up over time and it kind of balances out the starting yield. But my yield on cost is 7.4 on a simple basis, not including reinvested dividends, because the snowball gets bigger over time. Air products and chemicals has rewarded me over time with more and more dividends, with higher dividends, with more cash flow year in and year out because their business has done well. And so a lot of dividend investors, quite frankly, that's a big enough snowball for them. If the amount of money that is deployed to begin with, if it's big enough, that is enough of a snowball effect right there to retire. Such dividend investors can buy.
Really? If you have a bunch of monies to start with, you can just retire? What a genius idea. If I had $1 billion, you mean I could retire PPCIAN? Wow, I didn't think about that. I'm sorry. I'm being really positive. Look at me. I'm positive. I'm smiling.
Buy a stock like air products and chemicals. They could take the money out of it, the dividends out of it each year. That stream of dividends increases over time, so it can oftentimes keep up with or even surpass inflation. I know air products and chemicals just increased their dividend by a staggering 8%. I certainly think that is above our long-term rate of inflation. Maybe inflation's a little higher now, but certainly not over long periods of time. And so some dividend investors, that's a big enough.
That was one dividend increase. Didn't we have like 9% inflation at one point? Oh, wow. That means it's beating inflation, bro.
Snowball, especially for investors who have larger amounts of money to deploy right away. But for a lot of investors, that's not enough. So there's another lever that gets this snowball bigger, quicker. It gets the snowball going down a steeper slope. It takes the value of the dividend increases, but it makes even more leverage on it. It drives even more results on it. If that investor can afford to delay, fire, or financial independence, retire early a little bit. This is what is called dividend reinvestment. Instead of those dividends, when they're paid out, if I just take them to go pay bills, instead of doing that, if I continue to have a job, if I continue to work, I continue to grind it out, and I delay financial independence, retire early, I can take my dividends from air products and chemicals, or really any dividend stock that I have, and I can reinvest them back to purchase more shares of the.
Yes, that's what I've been doing my whole investing career. Yeah, and you know what also happens? I have to report those on my tax return. You want me to show you all my tax returns? There's a line for dividends. There's a line for interest. Yeah, I'm definitely putting numbers in there because of my dividends. The capital gains section, when you get those distributions from mutual funds, yeah, you got to report that on your taxes. And that means you have to pay taxes on it, which means that's a drag on your total returns because you're sending money to the government instead of letting it compound over time.
The same company or of a different high quality dividend paying company. And those more shares that are purchased in turn yield more dividends, more cash flow. And it is a cycle. It's a recursive algorithm, if you will. If you have a computer science background, the thing that I love most.
A recursive algorithm. Wow, this is very complex. You're buying back the stock that paid the dividend. You take the dividend dollars and you reinvest it. This is not a recursive algorithm. It's dividend reinvest. Let's not make this complicated. Okay, this is not complicated. You get the cash, you buy the stock again. Wow.
Most about dividend stock investing for those that reinvest dividends is it really is a recursive algorithm, which means the dividends get paid. The dividends buy more stock. In turn, the more stock pays dividends. Those dividends get reinvested again to buy more stock, so on and so forth. The cycle keeps repeating. And so that's why you see here in this illustration.
Well, what if the company, instead of paying a dividend, invested those dollars into new projects that grew their profits even more in the future? You ever think about that, Mr. PP?
That we have number one lever, but number two, it takes the slope, it takes the trajectory to the next level. The snowball can get bigger a lot quicker with dividend reinvestment. And typically I like to reinvest my dividends. Now, something important for all dividend investors to understand is that when a dividend is paid here in the United States on most of the kinds of companies I own, such as air products and chemicals, the dividends are called qualified. And what that means is they're taxed as long-term capital gains. And so there is a tax consequence on dividends. And that's something to be mindful of as a dividend investor, especially for someone who works, because there could be a tax consequence at the end of the year.
Really? You don't say. Oh, and you also have state tax. Here in Virginia, it doesn't differentiate. So every dividend, I pay 5.75% in Virginia. Okay. If you live in California, you're going to pay even more. Yeah. So sometimes the feds give you tax benefits depending on your income. If it's low enough, your taxable income's low enough, it could be 0%, right? But your state will still tax it. And then if you get up in the federal tax brackets, guess what? You can be paid 20% plus net investment income tax plus state tax. You're losing a huge chunk of that dividend. And the higher the dividend, the more tax you're paying, and you're getting annihilated by taxes. Okay? What? But it makes me feel good because I get the dividend in my account. It makes me feel good. Shut up.
Depending on where income levels are. Typically, for most people who are working, if they're above certain thresholds and they already file a tax return, there is a tax consequence for dividends, even dividends that are reinvested. And so that's important to keep in mind. Still, I look at dividends as one of the most efficient mechanisms for getting cash flow to the everyday person to pay bills, because as of now, at least, qualified dividends are taxed as long-term capital gains, which is a lower favorable tax rate. But please do consult your licensed tax advisor. I'm not offering tax advice. I'm not a licensed tax advisor, but that's something I did want to mention.
Oh, you know who is? Me. Book a free 30-minute consultation. I'm a CPA. I would be more than happy to do your taxes, business or personal, any state in the United States. You can talk to me for free. I give you upfront fixed quotes for tax preparation. I'm the boss. I'm the coolest CPA in the world. Thank you.
Mention as it pertains to reinvestment, because a lot of people forget that. They don't think about that. They don't think it pertains when dividends are reinvested, but no, it does pertain. But I want to hop forward to the third lever. One of the more important levers if someone wants to accelerate this, because I know when the snowball effect starts, the snowballs are smaller. It takes a while for it to build. But I can tell you, I've been in the game now for over 20 years. The snowball really does start building big over longer periods of time, especially when there's been a decade or more invested in high quality stocks that increase dividends year in and year out. But the third lever in which to accelerate that snowball is net new capital deployed. And so I have right now shares of air products and chemicals. They pay dividends. I can choose to reinvest those dividends and create a recursive algorithm that builds even more cash flow over time, steepens the slope as you.
Oh, it sounds really fancy, a recursive algorithm. And he's just wrong. He's just wrong. He doesn't understand total. He literally showed you an example of a stock that went from 95 to 315. He's like, oh, I can't sell that. What? Why?
You can see here in the illustration. But with the third level, I can take that slope even steeper. I can make it super steep by throwing more money at the problem as well. This is one of those cases, I know sometimes in society we have a problem and we think, hey, can we solve it by throwing more money? And sometimes people say, no, you can't solve that problem by throwing more money at it. I'll tell you, in my personal experience, at least with stocks, with automating income, the problem, if you will, of automating income and living off of cash flow, certainly throwing more money at the problem has worked historically for me. And that's the third lever. I can choose to purchase more shares of air products and chemicals. I can go out on the market and just say, hey, I'm going to put in another 1,000. I'm going to put in another 5.
That's actually the key. I don't know if you guys knew this, but it's not like trying to beat the market. It's actually investing as much as you can, as fast as you can, and as young as you can. That's what works. Yeah, I've been indexing my whole life. Okay. I saved a lot of money when I was young, and then I just let it sit there. That's all you got to do. Maximize your income, minimize your expenses, save the difference. Do it when you're young. And then as you get older, you can actually loosen up because you got all that front-loaded savings in your late teens and 20s. And for the rest of your life, you can have way more money than anybody else could possibly do if they started investing in their 30s, 40s, and 50s. Yeah, the older I get, the more I do leisure things. Like I was cheaper when I was younger. Now I like go out to eat and I don't care as much. I don't worry about money. because I saved when I was younger and it's paying off for me now. That's what works. Saving. Now, bro, I got to buy my next crypto. Bro, blah, blah. No, it's not. No, stop. Please. Thank you.
5,000, another 10,000, whatever it is. I can put more money, or I can be a smaller investor. I do $100 at a time, whatever it is. It doesn't matter. Every little penny, every dollar counts, especially now that trades here in the US, there's no commissions, typically speaking. And so, boy, smaller tranches, why not? But I can go and I can throw more money at the problem. And when I throw more money at the problem, I buy more shares of Air Products and Chemicals. And the more shares I buy with money I put into the system, hopefully I buy those shares at attractive valuations. Those shares in turn pay more cash flow. And if I choose, I can reinvest those dividends to buy even more shares that pay more cash flow. And those shares will pay dividends that I can choose to reinvest to buy more shares that pay cash flow. And so that's really the third lever that I wanted to discuss today. I have a fourth bonus lever as well, but when I combine levers 1, dividend increases, levers 2, dividend reinvestment, lever 3, the net new cash infused, this snowball becomes enormous, especially over a period of time like a decade. And that's what this is supposed to illustrate all the way at the bottom of this whiteboard. How this
I like how his board's like cut off here. I can see, okay, he's probably got a 1 over here. You can't see it. Then he's got 1 + 2 probably here. And then I see 1 + 2 + 3. He didn't even center his freaking board properly. I mean, I'm not saying I'm the best YouTuber at doing this kind of stuff, but come on, man. You got almost 100K subscribers. You got to be more professional than this, bro.
snowball can get so much bigger. And it really is a miracle to behold, if you will, especially once you've been in the game a long time like I have. You start seeing this unfold. But there's a reason I was talking about the tax consequences earlier of dividends. When dividends are dividend investors, typically, there's not a lot of taxes being a set it and forget it dividend investor like myself, because I'm not really trading stocks. I rarely sell stocks. So paying capital gains taxes on selling stocks, it's rare for me because I just don't sell stocks. I buy and hold forever. But as I mentioned, there are taxes when dividends are paid out. The fourth and final lever, and I didn't really illustrate.
Well, the concept of buying and holding forever works. Okay. You buy in your 20s and 30s. And then when you hit 60, 70, you can live off the dividends and selling some shares as needed. Okay? That's the truth. Buy in your working years, collect dividends, and sell as needed to fund your retirement. You are allowed to sell. If you have a stock that went up 1 trillion X, yes, you can sell some of it. Oh, it's going to be okay. I promise you. Can you think 1 trillion X? And that's literally his philosophy. Trillion X, literally, think of 1 trillion. Trillion X, he wouldn't sell it. He wouldn't sell it, not even a little bit of it, because you got to get the dividend, bro. Think about all the money you're leaving on the table. You're going to have to delay your retirement massively, or maybe never retire because your dividend income isn't reaching the level it needs to support yourself. But if you have a stock that trillion X'd, yeah, you could sell some of it. You're going to be fine. Oh, you're sacrilege.
Straight, it's kind of a bonus lever, if you will, that could make the snowball even larger. This is for people who really want to delay gratification. They want to delay fire. Maybe it's not even fire anymore. It's not financial independence, retire early. It's more of a traditional retirement. Those types of investors can enter into tax-advantaged accounts, which typically investors can't really start tapping into easily until they're in their 60s. Although I have a friend, Greg, shout out if you're watching. He's the dividend monster over on Instagram. Hope you're watching, Greg. He's found a way to do it early, and he's taking distributions from retirement accounts. But the benefit of the
dividend monster. How many names could these clowns come up with?
Final lever is it can grow the snowball even bigger, even quicker, because it basically, as the snowball is compounding, it takes the notion of taxes out of the equation. And so that's just, it allows more money infused into the system, more money in, more money out in terms of cash flow. And so that's kind of the fourth and final bonus lever. And so this, in a nutshell, is why dividend investing works. This is why I've been successful at dividend investing. And the hardest part about it all, quite frankly, is just buying a stock, setting it, and forgetting it. And not trying to trade in and out of different stocks.
He is right about that one. Most people can't even fathom just buying and holding something for decades. It's like, what? I got to trade on Robinhood, bro. No, you don't have to do that. No, you don't. You know, my federal Army retirement account, I started putting money in that in 2012, and I've done nothing with it. I've reallocated like so that I was 100% stock, but that's it. I just leave it there. It just sits there. And now it's looking pretty juicy. It's looking pretty juicy. I'm not going to lie. I like it. I like looking at it like, ooh, daddy. Ooh, big money. Big baller. And I didn't do a single trade, bro.
Stocks just holding on for long periods of time, where sometimes it seems in the short run like you're watching paint dry, because in the early days up here where the snowball is small, it takes time for it to get bigger. But once the investors say 10 years into the game,
you know what makes it get big really quick is if you're making a ton of money and you're saving a ton of money, your account will go up fast. You'd be surprised. Because if let's say you're saving $5,000 a month. I know that's like a crazy amount for most people. You're going to have $60K in that account minimum. Unless the market goes down. But you know what I'm saying? So you go from 0 to $60K in a year. That's that's measurable results right there. At least that's how it works. I mean, every time I get a paycheck and I was putting money into my retirement accounts, I'd be like, wow, that's growing fast. Yeah, it's about how much you invest. Okay, and not losing the money on clownishness. That's the key. No, bro.
it is possible for that snowball to get down here. I kind of feel like my snowball is getting to that point right now. And so it just takes time, but the snowball works. And I'm here to inform you all about that. I love you all. I hope you enjoyed the video today. If you enjoyed the video, please go ahead and click the like button. It's the best way you can thank me. Also, I always enjoy seeing you all in the comments below. I look forward to the lively discussion in the comments below. Quick note to everyone, I'll link to it in the pinned comment below, but on Thursday this week at 7:30 p.m. Mountain Time, I'm now in Idaho. I will be hosting a virtual Zoom meetup on Patreon for the Corner Patreon tier. We will be discussing Peter Lynch's iconic book, Beating the Street, which I think is even better than One Up on
was Peter Lynch a dividend investor?
Wall Street. If you haven't read the book, Corner Patrons, don't worry. Everyone is invited to join. Check it out in the pinned comment below if you want to learn more. These book clubs on Zoom are well attended. They're a lot of fun. And I have a new Discord server for Corner Patreon as well. This is the year to that I've been investing a lot of time and resources of my own into making Corner Patreon the best it can be.
I have a free Discord. See the pinned comment below.
All right, everyone, before I go, in terms of a full disclosure, I'm long air products and chemicals, ticker APD. In terms of a disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just here sharing my experience for fun and entertainment here on YouTube. It's possible to lose money in the stock market. And before you go out,
didn't 3M get clapped?
and invest in the stock market, please do consult your licensed financial advisor. I'm not offering any advice, just sharing my journey. And you can check out the description below where I have additional disclosures and disclaimers. I truly appreciate all of your support here, the likes, the subscriptions on YouTube. It's the best way you can thank me. And I can't.
God, I just don't like this guy. I'm trying to be positive. Okay. All right. Let's do some comments. So before that, the guy had a couple questions. Hold on. Let me pull up the Word document. Okay, so he said, after providing commentary, answer the following questions. Number one, which of the 4 levers would you use? The levers are listed on his drawing. So the most important lever, as we were talking about, was the net new capital lever. Okay. Dividend increases, great, wonderful. Reinvestment, yeah, you should do that. Tax advantage accounts, fantastic. The net new capital, how much you're throwing into the investment, is what really matters. Okay. If you could save $1 million a year and get the market's returns, you're doing better than somebody that could save $10,000 a year and is beating the market by 3%. Okay. Because you're saving $1 million a year. It's all about the net new capital. So that would be my big lever right there. Big old lever. All right, so he said, how many dividend dollars from the Snowball are enough for an average person for a year? I mean, it really depends on your life circumstances. Like if you have kids in school and your kids are in daycare and you got a wife that likes to blow money like a mad woman, it really depends. I mean, if you're frugal, you only need a couple grand a month. You don't need that much money, okay? But, if you want to live in the city and, you want to have 3 kids and you want to have this rich wife that has to get her freaking Botox and her hair. And yeah, you're basically not going to retire. Let's just be honest. Okay. So it really depends on your lifestyle, but you only need a couple grand. If you have no kids or they moved out of the house and you're frugal and you live in a modest area, you don't need a lot of money. You really don't. Okay. It all depends on your lifestyle. Okay, so that was the second question. And he said 3, how large would the snowball need to be to achieve the desired amount of dividend dollars from the second question? I mean, if you're focusing on dividend yield, I mean, I don't like high dividend yields personally, because it's generally a sign that a company doesn't have any new things to invest in, number one, which means it's not going to grow. And number two, a high dividend yield could be an indicator that the stock has sold off recently, because the dividend yield is the trailing dividends divided by the share price, right? Yeah. So if the share price is going down, your dividend yield is going to go up because it's looking at dividends in the past. But if the share price is selling off, that's a sign something could be wrong with the company. And that means dividends in the future may be slashed or removed altogether. So I don't like focusing on the dividend yield. Just look at the company. If you're going to analyze a stock, just look at the company and think about its future. That's what you have to do. Don't worry about the dividend yield. If the company has a bad future, the dividend yield doesn't matter. If it has a great future, okay, then the dividend yield also doesn't matter. Focus on the company itself, or just buy an index. And when you hit retirement, you can take the dividends because you have to pay tax on them anyway. And then you sell whatever you need to on top of that. So if you want 4% a year and it pays out 2% dividends, okay, sell 2%. Basically just match up the dividends and you're done. Done. Okay, I need $40K of income. I got $20K of dividends. I'm going to sell $20K of shares. Done. That's all you have to do. It's as simple as that. Because if you want to wait till you have $40K of dividends, you're going to have to work a lot longer. So, I mean, for me personally, if I wanted $40K a year, 4% rule, $1 million liquid, like in stock that I could sell. That's basically it. So, all right, that was a sponsored video. Hope you guys enjoyed it. If you want a sponsored video, it is $50 for non-members and $45 for members. Cole's in the house. Strong man gets no dividends. Hey, I get some dividends, okay? I get some dividends, Cole. Finally got a $5K a year in dividends in my portfolio. That's roughly what I get. Actually, no, I probably get a lot more, but a lot of my money's in my federal retirement plan, and it doesn't even show the dividends. It's like a accumulating fund. So I can't even see what my dividend income is in my federal account, and that's like half of my stock, almost. So, I mean, on my tax form, it's about $5,000 of like various sources of dividend and capital gain distribution income. But it's probably more. It's definitely more. Before my time. Someone says that rap reference is from the 90s. Yeah, I grew up in the 90s. Somebody says VT is paying a 2% dividend. Let's say someone has $1 million portfolio and they can live off 2% a year, which gives them $20K a year. Then I think it would make sense to live off dividends and never sell shares. Okay, but no, who's going to live off $20K a year? No, or you could just sell some shares. VT's compounded return over the last 10 years has been like 10 or 11%. That's total return. Why would you only live off the dividend if you made all of that money over time? You could sell some of the shares. You can do that. I mean, if you had $1 billion, okay, you can live off the dividends. But most people aren't going to have that. They're going to have like maybe $1 million or $2 million. Well, how are you going to live off that? Oh, you can put it in high yield dividends, or you could sell shares. Recently got into selling covered calls. Taxes this year will be extra fun. Oh, somebody could help you with that. His name is Christopher Bell, CPA. Book a free 30-minute consultation. There's talks having the stock market run 24/7. Do you think Jeremy would get any sleep if that happened? Oh, I bet he sleeps like a baby. Jeremy sleeps like a baby. His scam is just going crazy. He's making his YouTube subscribers are going up. He's making all this money from grifting. Oh, he sleeps like a baby. But when the market goes down, he panics as always. So he'll be fine unless the market goes down, and then he'll be sleeping like absolute crap. Good quality investments over worrying about dividends. Exactly. Exactly, people. Anyway, that was the sponsor video. Like, subscribe, consider joining as a member to support the channel. Consider booking a free 30-minute tax consultation as we discussed below. Everything you could possibly do is in the pinned comments below. My free Discord, my book, Stop Being a Broke Loser, one-on-one consulting, tax preparation, free 30-minute consultation. It's all in the pinned comments below. I reinvest dividends from stocks like UNP and Microsoft, but I keep most of the rest to invest in other positions. I just set it on reinvest. I mean, now that I'm going self-employed, I'm actually taking the dividends. And then if I have to, and then basically I want $6,000 a month in my checking account at the end of each month. So I'm going to have everything go into my checking account. If I have more than 6,000, the difference gets moved to treasuries. If I have less than 6,000, I transfer money out of treasuries and into my checking account. That's my money management, basically. So I take all the dividends, everything goes into my checking, and then I move it back into treasuries as needed. Okay. And eventually, once my income gets up to a significant level, I'll just start doing what I've always done, buying and holding. That's the plan. All right. Like, subscribe, and we'll see you in the next video.